everyone, Chad Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today we're taking a look at the S&P. Now, the S&P 500 had a massive start to the day, big old run to the upside, starting off the morning with a very small gap, nothing really to write home about, and quickly filled the gap, right? One tick. But if we look at that first candle of the day, well, a lot is told on that first candle of the day. It's huge, first of all, very strong bull candle, closing near its highs, and it's also breaking out of yesterday. Now, yesterday was a holiday, but it's still breaking outside of that. So it's a very strong first candle of the day, and we talk about this every once in a while, a bar one swing, the first trade of the day, you can find off of the first candle of the day. It's more aggressive, not as good a probability, so you have to go for a larger target, and it would have filled all of them that you could have ever wanted. So a very good start to the day. After we start getting some continued bullishness, we see more and more buying pressure. Looking at the first few candles, closing on its highs, sort of weak, but still closing above the prior candle's highs, so we're still seeing that momentum gaining. Now we're starting to see a little bit of weakness, and as soon as that weakness shows up, boom, pops right back up again. So the buyers are hyper aggressive on this move up. We started off the first, well, 1, 2, 3, 4, 5 candles of the day, all bullish, and if they weren't closing near their highs, the next candle did, right? So the first bear candle that forms, the buyers are going to swarm all over it, knowing that they're buying a pullback, and that might be the only pullback that they get a chance to jump in on. So buyers will begin buying on that pullback, and also there's going to be a lot of buyers that maybe don't want to get in that aggressively. Maybe they don't want to buy underneath the low or the close or buy a breakout above. They're waiting for a little more information, so they get a nice bull candle, and that's another signal to jump on in and continue that trend to the upside. There are going to be even more traders who maybe don't want to get in that aggressively either. Maybe they're not sure. I don't know what really is unclear about how strong of a trend this is, but there will be buyers that wait until they get a good candle breaking out again, and that is the candle right there. So another good continuation move for a quick little scalp up. After that scalp up forms, we get a nice little pullback, that good little pullback here, comparative to the one candle pullback that we had from before. We get a bear candle closing on its lows. Okay, but then it goes doji. Strong bear candle into a bull response. Very obvious the buyers are going to buy into that one as well for a quick spike higher. That's when things get a little bit interesting though, because on that spike higher, we were able to close outside of the high, right? We closed outside of the high, we cleared the high, everything is good to go to the upside. But then we start seeing some signs of weakness. The very next candle, weak bear, not really a big deal, although there is a lot of wick on that bull candle that broke out. Kind of curious to see what happens next. And they followed up with another strong bear candle, and then another strong bear candle, and another, and they're starting to stack these bear candles together. Now, buyers are likely going to be buying into this pullback, assuming that eventually we're going to at least attempt to go back up to the highs. And we get a nice buy candle, maybe that even trapped in some buyers, and then just hammered lower. So with that massive bear candle down, things shifted a little bit, right? There are going to be a lot of traders who maybe wanted to buy a good pullback, and then they see that huge bear candle and they're like, wait a minute. something shifted. This isn't what we've been seeing. The bears shouldn't have been able to push that much to the downside, so they're going to wait. Sellers will begin selling into this, but it's a little bit early, so aggressive. And we get bad follow through. Buyers try coming in, they fail, big bear response, and then they fail and they get no follow through. So we're starting to see that fist fight, right? The buyers are trying to buy cheap, but the sellers are looking at this thinking, well, we just failed off the highs aggressively. We should be falling lower. But they're not getting the move either. We get a bull move up, doesn't trigger in. The sellers try, they don't trigger in. And then the buyers finally show up to the party for a finalized move to the upside. So very interesting little fist fight here that we have on the S&P, and they're still going. Arguably, there will be traders who are looking for a bigger move up, maybe to the top of where we found that breakout move to the downside, maybe back up towards the highs. Either way, there are likely still buyers in this move looking for continuation to go to the upside and haven't really had it yet. All things considered, the sellers have tried to come in several times, and they haven't done very well either. So again, it's that fist fight that we're seeing. The buyers seem to have the edge. Now it's just a matter of who wants to win the fight and who gets knocked down first. So very interesting day, and that's going to do it for this one. Great combination of market psychology along with technical analysis, seeing what's going on here. If you have any questions about it, you can always send me an email, jbrink@slingshotfutures.com. Hopefully you learned something. Hopefully you found it interesting, maybe a little entertaining, and we'll see you next time.